All right, everything should be good to go. We are live. Let's get a rocking and a rolling. Welcome back to the channel, Crypto Trend Trader, with our Wednesday midweek market update. It is February 9th, 2022, 8 p.m. Eastern Standard Time. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, let's jump right in and rip it and roll. So obviously, a pretty strong day today in the markets overall. Quite a bit of aggressive moves to the upside in the stocks as well as cryptos. Had a nice little breakout recently, the one that we have been foreseeing, foretelling, expecting, anticipating, whatever you want to call it in crypto. So we've hit our measured moves pretty much to the T. So we will check that out. We're going to jump in and take a look at our regular stuff. Look at some stocks. We've got some gold miner, gold and silver juniors. We're going to look at the gold and silver chart, a little uranium proxy, lumber by request. And then we're going to look at some pot stocks as well. Starting to look like they are trying to carve out a bottom. Been building a position recently and had some nice bounces on some of those as well. So we will look at the main indexes for the stock market, and then we'll see where that puts us at. I'll look at a crypto cap and a couple other things along those lines as well. Pretty much everything just having that reversion to the mean play that we always discuss, expect, and love to play. But unfortunately, typically after the reversion to the mean play breakdown, we usually see continuation to the downside. So that is what I'm expecting with a higher than 50% probability, but of course without certainty because anything can happen, but the market will tell us. So yeah, let's jump right into it. If you can hear me loud and clear in the chat, let me know. What's up, Adam? Good to see you, my man. I'm assuming you can hear me, but if you don't mind just letting me know what's coming through loud and clear, that would be absolutely fan-fucking-tastic. So obviously tomorrow is, as far as news goes, tomorrow is a big deal. We have that CPI number coming through. So just a little recap. We had a huge job number come through. Was it adjusted seasonally and that's why it was so big? Did they underclaim the week before or the month before? I mean, whatever, it doesn't matter. The fact of the matter is it was better than expected. So we know right now that the stronger the economy is, the worse that is for the actual markets, because that means that the Fed is going to remove the, training wheels. So the market is currently like literally, propped up on training wheels or on a crutch or whatever metaphor you want to use. And the better the economy actually looks, whether it's real, fake, whatever, whether you believe the inflation numbers, whether you believe the, employment numbers, whatever, whether you believe it or not, those are the actual numbers that people are using and the only quantifiable numbers that we have, unless you're going to go full on like John Williams shadow stats and but it doesn't matter because that's not what the market looks at. That's what a fringe little small group of conspiracy theorists, borderline truth seekers look at. Now I'm not saying it's not true, but I'm just saying that's the outskirts. Most people are looking at the real legit numbers, and that's what the bots, algos, market makers whales, that's what they're going off of. So that's what we use because we're doing technical and fundamental analysis based on actual numbers. Even if those actual numbers are fake, at least they're the same thing everyone else is looking at. So that being said, we had great job numbers. Probably going to get so if we have good job numbers, that's bad for Fed support because the Fed is going to say, okay, the job market's doing great and inflation is bad. So we need to pull back the help. We need to continue along this hawkish path. So then this CPI number that's about to come out is probably going to be bad. Maybe over 7%. We'll have to wait and see what the analysts are pricing in, what the market's pricing in, what they're expecting. If it's anywhere near 7%, though, you have to assume that Jerome Powell is going to stay his course. So that's basically going to be, the last big number or the most important number, I should say, that everyone's watching. If it comes down, even a couple, percent down below, maybe it was what, 6.8 or let's just say 7% last time. Let's say it came down to like 6.5, 6.6, something like that. That looks good. And then the Fed can be like, oh, okay, yeah, we're still going to taper, but we're going to kind of take it easy. It looks like inflation's cooling off. I know we said it was transitory, then we said it was not transitory, and now maybe it is transitory. We can speculate as much as we want. If the number comes in low, the markets will probably react good to that because they will expect the Fed will be less hawkish. If the number comes in hot or above 6.8 or above 7%, especially if it comes in real hot, the markets are going to take it real, real bad because then they're going to expect the worst. Everyone is saying right now that the market is pricing in 5 rate hikes. Now people are saying 7, maybe it's 3. But the general consensus is the market is pricing in 5 rate hikes. That's total bullshit. The market is not pricing in 5 rate hikes. That's an absolute fact. I mean, I can say that with 100% certainty. The market is pricing in jawboning for 5 rate hikes. But the market is pricing in 2, maybe 3 rate hikes in 2022. There is no possible way in existence of the world that the market thinks the Fed will raise rates 5%. But the difference this time is that previous times when the Fed has said they were going to be hawkish but then pulled it back, or they started to be hawkish and then they ran it back, the difference is we never had inflation. Now we have legitimate inflation. So if this inflation number comes in hot, if this CPI number comes in hot, I think the market is going to be like, oh shit, maybe they really are going to hike rates 3 times or 4 times or 5 times. Or, I mean, 7 is pretty ridiculous. It's possible, but come on, let's be real. Inflation would literally have to get out of control. And you guys know how I feel about that. So, but anyway, that being said, tomorrow's a big day, big inflection point on the market. Obviously, it is, a Thursday as well. So we'll see what happens. Maybe the markets, rally off of a low number. Maybe they just absolutely tank off a high number. But it is interesting where they have closed at right now, where they're positioned at. And I'm not just talking about the stock markets. I'm talking about crypto as well. Because we basically got the move that we've been expecting in crypto, anticipating, predicting, whatever you want to call it. So let's jump into our stock market, get started over there, and then we'll work our way into crypto and come full circle. So Icebox says loud and clear. Appreciate you, brother. Asatos says loud and clear as well. Evening, morning, everybody. Yeah, good to see you guys. Appreciate y'all. With a little volume feedback. So let's jump into it. So, okay, we obviously did a deep dive recently on the yield. That was in our last video from Sunday. If you didn't check out that video, highly recommend you go check that out. Basically showing off the relationship between the 2 and the 10, recessions, and, basically what we can expect and what it looks like is happening now as the 2 is literally biting at the heels of the 10 right now. Maybe not quite, but pretty much. So here we have the TNX, obviously closing at a cycle high right here. This is the 10-year Treasury yield, not the actual bond. So obviously bonds are getting crushed right now, like we expected, like we predicted. Everybody wants to flee to bonds for safety, but what's the point of being safe in bonds if you're losing massive percentages of your principal? Doesn't make any sense. Reward-free risk, as Peter Schiff would say. You get nothing but a guaranteed loss, and that's it. So yeah, that's it. There's not even like a second half of that. You put your money in bonds, you make less than inflation, so you lose there. And if they go down, you lose there. So the only way you can make money in bonds is if bond price goes up, but it still has to go up enough to offset the inflation, which clearly you're getting paid less than. So they're trash. They're useless. They've been in a 40-year bull market, and it is over, in my opinion. So we're almost at 2%. We're at 1.928, which 2% is obviously our target. Slowly just been creeping on up. Obviously, taking out this high right here was a big deal. Consolidated at the top of it, and now we're seeing that move up. So we obviously have our cup and handle playing out, and we are in the process of our measured move breakout. So we have a couple of targets to the upside, but obviously, 2%, nice round number is our target, but we also have a fib target of 2.07. So I fully expect us to get there. Do we put in bearish divergence once we get there? Do we top out, at least consolidate for a while, and then eventually start playing out these measured moves? We probably do, but in the meantime, that's the target to look at. Nice, round, sweet 2%. And, we also have to keep in mind that if we start getting above those levels, we start getting back to key levels from, like historical levels. Like, we consolidated basically in this range from, this is 2011 right here on the chart at the same level. And then in that time, we basically range traded. In 2012, we came down as low as 1.4. Same here in 2016. And then we also topped out right here at like 2013 and again in 2018. So we're back at levels basically from 2011 right now. And, if we go back a little further, we actually have like a little, let me go to the weekly real quick. We actually have a peak or a trough down here from 2008 that's literally just above our heads. So at this point in time, we've broken into a range with the lower level of the range at 1.4% and the higher level of the range around like 3%. So between, let's say, 1.5 and 3% is where we're essentially going to be range bound now that we have penetrated it. And then, of course, we have an inverted head and shoulders right here. We have that cup and handle we were looking at. We have a bunch of Fibonacci levels. We have reclaimed the 200 exponential and simple. We have flipped the 200 exponential back over blue. We're above the 200 simple. It has basically a flat slope at this point in time and very close to flipping over blue. We're in the bullish control zone. We have all green histograms. We're back above the red slope line and the zero line. Everything looks bullish right now on the treasury yield. So again, if we push up to like that 2%, we consolidate around there for a bit, chop around, flip this slope line over blue. Now we're bullish on the weekly chart for the bond treasury yields, and we've reclaimed this. So now we have that potential move back up to, retest like the top of the range, around like 3%. But this looks strong to me. It looks like we're going to be pushing up here. This means that the bond market is going to be bad. So where does that money go? Well, we'll have to see, because if the stock market doesn't look good and the bond market doesn't look good, where does that money go? It has to go somewhere. And crypto is correlated with stocks. So where does it go? Precious metals? Does it just all go into commodity and energy? I mean, we have to see. We know that there is, if we're right about this hypothesis about what's happening here, and the market continues to confirm what we're seeing, there's going to be a ton of money coming out of the bond market going somewhere. And we need to figure out where that money's going to go so we can position ourselves accordingly, because that is probably going to be the next big trend. So that's where we're looking to get. Now, is it possible that the stock market and the bond market both go down at the same time? Of course it is. Anything's possible. We have to look for that correlation. Somewhere something's going to blow, and we have to figure out what it is and get positioned for it. I have a feeling that it's probably going to be commodities, maybe precious metals. We'll have to wait and see. But it's very likely that we see that blow somewhere. Quentin says, what is the hypothesis? I missed it. Essentially, Quentin, that what's happening here is we're flipping the trend over in the treasury, like the TNX, the 10-year treasury yield. So if we're flipping back bullish on this and we're going to potentially be pushing to the upside, this is inversely correlated to the bond market. So if the bond market starts getting crushed, the money's going to move out of the bonds. Well, typically what happens is people are forced out of bonds chasing higher yield or gain somewhere else. So they typically go to stocks. But if money comes out of bonds, it throws off the balance between bonds and stocks, obviously, if the price of the bond starts going down. So typically money would flow back into bonds to rebalance that out, because people like to run, 60-40 or 80-20 or, whatever percentage balance. And a lot of times it's automated. So if that money's going to go somewhere, we have to figure out where it's going to go. And that's our goal, is to figure out where the next big trend is going to be. I mean, we got on top of, the crypto trend. We got on top of the stock market trend. We got on top of the, oil trend. We got on top of the energy trend in general. Now we need to figure out, where is this next big trend going to be? So like, I have a couple small sectors that I'm watching, like potentially miners, building some positions in those, obviously gold and silver potentially. And then, we're paying attention to pot stocks as well, which we'll take a look at today. But we really got to figure out where it's going to go. But I think it's going to be commodities, the way it looks right now. But we'll wait and see. Let's take a quick look at the monthly chart too while we're at it. So obviously getting crushed forever, the bond treasury yield. So this push up to retest the 200 exponential on simple is all the way up here at like 2.6, 2.7, which is, essentially the top of that range is up here at 3.0. So I don't think it's unrealistic to think we come up here. If we break out of this trend, if we break above this, it will be the first time since 1987, we have been below the 200 exponential and simple moving average on the 10-year treasury yield. So if we break above that level, this is going to be a legitimate trend change since 1987. So that is a huge freaking deal. I mean, that's like 35 years basically of downtrend in the yields. So that's a key level to watch out for. We're still a little ways away from it. It's not worth getting excited or worried about just yet. But if we look down here at our indicator oscillators, we have the 821 trending to the upside. We're making a cycle high right now. We took out this previous high from March. We got the hard buy signal at the bottom of the range. We put in bullish divergence. We broke out. We got left the bearish control zone. Stokes are angled strong to the upside. The blue Stoch rolled over exactly like we said and is preparing to enter into the bullish control zone. We have all green histograms on the TJD TDMACD. We're above the zero line. We're above the slope line, and the slope line is flipped over blue. So historically speaking, when that slope line flips over blue, that lasts for years. So we're potentially looking at, this was from 2013 to 2019. This was a 6-year period. This was a shorter period right here, 2005 till 2007. So 2 years. This is kind of like a little clusterfuck right here. Again, we have like basically, 2 to 5 year period basically where we could expect this to play out and push to the upside. So if that means rates are going to consistently rise to the upside for the next 2 to 5 years, what is that going to do to asset prices? It's probably going to crush them. So if rates are going up, if asset prices are going down, bonds are going down because rates are going up, that money has to go somewhere. We have a potential like 2 to 5 year period where that a ton of money is going to leave the stock market, potentially, is going to leave the bond market, potentially, and we have to figure out where it's going because we want to get in front of it. We want to get positioned for it so that we can capitalize on whatever is going to pump. Whatever is going to see that money flow into it, we're looking for that volume flow. We're looking for that big trend, and we're going to get in on it. So that's the main thing we're looking for, is a massive trend that's going to last for multiple years. So let's look at our oil chart next. We spoke about this on the last stream. We basically have this divergence top going on oil right now, and we're basically back at the top of the range. You could draw this a couple different ways where we already hit it. Maybe we just fell slightly short of it. Doesn't matter. Regardless, we're at resistance now. We know we want to buy support in green. We want to sell some resistance in red. So where this consolidates to, we have a clear support here at like 83, that previous top, and then also our orange support here. We have 200 exponential and simple. Closer down around like 76 bucks. We have the bottom of the range and the orange thick boy support down here, basically at like 66. So that's the 3 levels to the downside we're paying attention to. If and when we get the breakout above 97, above that $100 barrel oil, shit could get wild. But we do see the divergence signal printing. It is spread out a little more than I like to see, but this is very clear level of divergence right here. So we have the sell, we have the buy, we have the sell. That is like the hard buy and sell divergence signal. Basically, we get the sell signal, we exit the bullish control zone, and then we push back up and attempt to continue the rally. That's often a short squeeze or a failed breakout or a throw over or, whatever you want to call it. And then after that, we roll back over to the downside. We get the hard sell again, and then we're now getting ready to leave the bullish control zone. And then you'll notice here where the stochastic tops out at in blue right here, we then see a lower high on the stochastic here in blue. And then oftentimes we'll see a similar signature with the knife here, depending which peak you go to. It's either like same high as this one, lower than this one, etc. But more importantly, we're seeing some clear divergence taking place because we obviously had our peak right here, and then we have a higher peak right here. But on our actual indicator oscillator, we have a lower peak right here. And then if we look at the TJD TDMACD, we have a peak right here, and then we have a lower peak right here. So we have basically an internal cycle bearish divergence playing out on the daily. And then we've seen how much oil is following like divergence on like the daily and weekly as well. God, I hate this chart. I wish they would just delete that and we could just pretend like that never happened so the chart would be more usable. And then obviously we want to pay attention to our weekly chart here because we have a high, we have a lower high, we have a third lower high, and we're basically at that level now. Now, obviously this doesn't close until the end of the week. So if we close here equal to or below this, we'll have a fourth drive of bearish divergence. If we close above this right here, we can invalidate this point and potentially invalidate the bearish divergence, at which point in time we could possibly get an oil breakout to the upside. Possibly. We have to wait and see, obviously. And then here we have a high, we have a lower high, and then we have a third lower high, and then potential for a fourth lower high. There's still plenty of room to run right here. But again, that would be 4 drives of potential weekly bearish divergence. So that could very easily take us down to our support in like the 60s. And obviously oil is overcrowded. We like to get in position of this stuff way ahead of time. And now everybody's in oil, everybody's in energy. Energy is the new crypto, and we know what happens by the time everybody piles on and gets excited and gets popular and it's mainstream. That's when you're holding my bags because I'm on to the next trade. You know, and I speak for all of us on that one. So let's keep rocking and rolling. So Dow Jones is next here. So we have the Dow Jones daily basically has, all right, so we came down, we found support off the 200 exponential and simple. So now what we're paying attention to, what we've been discussing and paying attention to this entire time is we need to see it come up here and take out the high. We need to see it put in a new all-time high. If it does not put in a new all-time high, then essentially what happened is we put in this low right here off the 200 exponential and simple. We put in a new high, and then we broke down and we put in a new low. Or even if we put in the same low or a slightly higher low on like the actual daily time frame, the fact of the matter is we got less of a reaction off of the moving averages. So the first time we came down, we bounced nicely. We bounced nicely off the 200 exponential, and then we put in a new high. The second time we came down, we penetrated the 200 exponential very deep and aggressively. And that tells us that the market is weak right here, because what we would expect to do is hit the 200 and then just push and keep pushing and not come anywhere near it. If the market is weak, we'll come back to it and we'll double tap it. We'll retest it. And if we break through it deeper, whether we put in a lower low right here, whether we wick down lower, or whether we just go lower in comparison to the actual moving average itself, here we wicked off it perfectly. Here we went way through it. So now the last thing we want to see, if we're bullish on these markets, the last thing that, you know, market makers, whales, analysts are going to want to see is a lower high right here. So if this starts to roll over, if that CPI print comes in hot, if the market gets bearish, if this starts topping back out and rolling over, it's going to look very bad. Because then we'll have a high, then we'll have a low, then we'll have a lower high, and then we'll potentially come down here, retest the 200 exponential and simple again, and then potentially put in a lower low. So again, still hypothetical. We don't know that's going to happen yet. You know, we obviously broke down from our key support right here. We put in the measure move literally exactly to the T. Once again, with that wick down here, it got bought up aggressively, and now we're pushing back to the upside. So we'll see what happens. We have a very clear support here in red. We violated that support as well, but we have reclaimed it, and same with our green support line here, the horizontal. If we switch over to the Dow on the weekly, we will see once again that we are still printing massive amounts of divergence. So we've talked about this a bunch of times. The Dow on the weekly is signaling extreme weakness. We have a high right here. We have a lower high here. Arguably, you could count this one. I like to have at least 2 green histograms, but a high, a lower high, and then potentially rolling up here to put in another lower high. And then that corresponds with a high here, a higher high, a third higher high. And then, you know, basically this is a same high or slightly lower high, depending on how you want to count these. We have multiple drives of bearish divergence on the weekly. And the same thing here. We have a high, lower high, lower high, lower high, potentially putting in another lower high. And we're clearly trending downward. We have a red slope line. We're literally just selling off while the price continues to melt up. So the indicator and oscillators are trending down while the price action trends up. We know what that means. It's unsustainable. It means that we're using less energy to go higher. And we know eventually that the indicators, oscillators, and price action all come back into line. And the divergence goes away, and they start to converge once again, and they start agreeing with each other, and then the market can proceed in the direction that it agrees on. So right now, it looks like the market wants to break down, but it's slowly still kind of hanging on. Let's switch over to our monthly and take a look here too. So just a quick discussion on the monthly. So we know we don't get this signature often where we leave the bullish control zone and get the hard sell signal. That is the two things we look out for on this indicator. The next thing we look out for on the TJD TDMACD is multiple red histograms in a row that correspond with the hard sell and leaving the bullish control zone. So we know this was when we left the bullish control zone right here was in 2015, and we had sold off pretty heavily. We know we left the bullish control zone and got the hard sell signal right here in 2018, and then we proceeded to put in lower lows multiple times after that. One of them corresponded with bearish divergence on the monthly, and of course a pretty aggressive sell-off, which was our CVD dump right there. So how did we see it coming? Well, bearish divergence and a bunch of other indicators, oscillators, signals coming in from all the different stuff we always talk about over and over again, how we predict these things based on technicals, not Ouija boards or, readings from, what's her name, Miss Cleo. So we're still in the bullish control zone. We have the hard sell signal, but we're still well above exiting the bullish control zone. So that's what we're paying attention to on the monthly. Does this continue to trend down and violate this level and then confirm the hard sell signal? Which obviously we're hanging on to support for now. So the Dow Jones looks okay, showing weakness, lots of bearish divergence that's been playing out for some time now. So got to be careful in these markets. We could easily put in a new high though, and I would not be surprised. S&P, so same thing, broke down on the S&P. This time we tagged the 200 exponential and simple, got a little bounce. This is not looking as strong as the Dow. We're at some resistance levels now. We bounce back up. We have clear support right here that's now acting as resistance and potentially a double top. So the daily does not look particularly great. Another thing that I didn't mention that we always pay attention to here as well, this shows that the market is topping out. We're losing momentum. When the 200 simple, the light blue, crosses above the bright blue, or maybe the dark blue crosses above the bright blue. I don't know. I feel like these adjectives can be misinterpreted. When this 200 simple moving average is above this 200 exponential moving average, like we see from the cross right here, that tells us that the market might not top out right away, but it's probably going to top out very soon. The same way that we can use that when we see the market bottoming out. When we see the 200 exponential below the 200 simple, it means that we're strengthening to the downside still. When they cross back to the upside here, it shows us we're strengthening to the upside. So this cross right here tells us, okay, we're probably going to go into a long, strong bull market. The same way that this tells us, okay, we're probably going to top out sometime in the near future. Doesn't have to be right away. We almost always put in a new high after that cross, and then eventually we break down and go lower. And then S&P, again, weekly, we see that same trending downward red slope line. We see the same bearish divergence taking place as we put in new highs on price action. So we know the weekly is looking weak on the S&P as well. And these are our two strong indexes. Again, we're seeing the hard sell signal still inside the bullish control zone, 2 red histograms on the monthly. So we see that that is a very common topping pattern and one of the last things we see before these aggressive dumps. Could that be invalidated? Could we get bullish again? Does it have to go down? No, it does not. Yes, we could get bullish again, but it doesn't look good right now. So now let's get into the Nasdaq. So obviously the Nasdaq had a long correction and it was starting to look okay, decent, better based on a couple of stocks. Some of those stocks are what's holding up the indices as well. But this looks terrible right now. We have officially broken down below the 200 exponential and simple. We came back up for the retest. This is our reversion to the mean play. And now here we are getting rejected basically at the 200 exponential, which is now flipped over red. The 200 simple is basically sideways. So if we literally just stay where we're at right now, this flips over pink or red or whatever. And we've already confirmed technically a bear market. We've kind of like tried to save it. If we get back above 14,743, we could save it and continue to the upside. And I would be glad to be bullish again. But as of now, this does not look good. The Nasdaq does not look good. It literally has to do nothing to look bearish, but if it wants to look bullish, it has to pump, if that makes sense. So that's our bearish bias. Not because I don't like the Nasdaq, not because I don't like tech, not because I'm mean to Cathie Wood or Elon Musk, but because that's what the chart's telling us. That's what the breadcrumbs are telling us. The whales, the market makers, the movers. And again, we see on the Nasdaq weekly here, clear bearish divergence, a high, a lower high, another lower high, trending downward, hard red slope going to the downside below the zero line, hard sell signal, left the bullish control zone and selling off aggressively. And we see here the 821 have crossed to the downside here, here, and right where we're at right now, typically what happens is, this is the most common thing you see. You get the 821 cross to the downside, starts to sell off, attempt to retest it. If you cannot reclaim it and cross back to the upside, you get an aggressive, violent dump back down to the 200 exponential and simple. So we see it again here. We try to reclaim it, and then we just gap down, indecision candle, and then hit the 200 exponential and simple. So that is our target to the downside. Based on probability, we push back up here. This looks okay for now. If it gets rejected, though, we probably retest the lows, and when we take out 13,464, aggressive dump back down to like, 10,500, 11,000. I mean, that's a violent move to the downside. 20 to 30% to the downside from where we're at now, not even from like the peak. So and every time we get that 821 cross to the downside, every time on the weekly, we retest the 200 exponential. Here we get it, retest 200 exponential. Here we get it, retest 200 exponential. Here we get it, go into a violent bear market. This was the global financial crisis in 2008. Here we get it, retest. Here we get it, retest. Here we get it, initial push down, try to push back up, lower high, bearish divergence, depending on the time frame, and then we retest it. Here we get it, retest it. Here we get it, retest it. So every time we have gotten this, we retested it, with the exception of right here, where we got to push up to a lower high, and then we retested it. And we're also the furthest we have literally ever been. I mean, this is like, what happened going into 2000, .com bubble burst. Now, granted, here we got that parabolic rally, that last push up, that melt up. So maybe we get something like that. It's definitely still possible. But we are literally the furthest away from the 200 exponential and simple we have ever been, with the exception of the .com bubble burst. And we're seeing tons and tons of the same things going on. I mean, speculation in the most ridiculous things. I'm not even going to mention some of those things, but let's just say NFTs. We'll just start with NFTs. We'll start with the majority of companies that are publicly traded on the stock exchange don't even make money. Like, that is a huge warning sign. When you're like, oh, we only lost $3 billion. Like, we're only literally bleeding money in the best economy, strongest economy, easiest monetary and fiscal time ever in all of existence, when money is literally just being puked out to anywhere possible, from every orifice possible, to anyone with an idea or, an NFT of an idea. You don't even need an actual business or to make money. That, to me, is rampant speculation. So we got to be real careful here, because if we do get this breakdown, it's going to be an aggressive one. And keep in mind, for tech, this 25-30% move, a lot of the stocks that are in the Nasdaq are already down 30, 50, 75%. So if this index tanks, if the big names, Microsoft, Nvidia, Apple, Tesla, if some of these things start to roll over, like for real, and we go into a hard correction, Google, Amazon, Netflix, all these things keep getting crushed, what are like your I'm not even going to mention them by name, but what are these stocks that are down already 66, 75 plus percent going to look like? They're going to lose another 50%. They're going to lose another 75%. They're going to go bust. So we got to be real careful in some of these speculative plays. If you don't make money right now, I've been saying this to the group for a while. I wish I could take credit for it, but if it don't make money right now, it don't make sense. And what I mean by that is, if a company is not profitable right now, there's, in my opinion, not financial advice, there's no reason to be involved with it. I don't want anything to do with a company that is not making profits. If it don't make money, it don't make sense. S-E-N-S-E. Or cents. C-E-N-T-S. Because obviously it's not making any money. So how can it make sense? Anyway, Russell is next. So the Russell is in the middle of the move we've been discussing. Obviously the measure move played out beautifully. Touch it to the T. Hit the blue box. Back rip into the upside. We do expect a retest, as we've been predicting, as we've been expecting, as we've been discussing. 2,131. So we're well on our way there, almost there. I do expect this fully to get rejected. This is an extremely, extremely strong resistance. It basically has been acting as resistance in January of 2021. So over a year, it was support. So now that we have broken down from support, I expect us to retest it, fail to reclaim it, and then just get absolutely crushed, decimated. And this is your publicly traded small cap stocks, the next 2,000 biggest stocks. A lot of these don't make money. They're trash. The only reason they still exist is because they were given a zombie handout, free money to just hang on for a little longer before the zombie apocalypse. Well below 200 exponential. Well below 200 simple. Slope to the downside aggressively. The old ruddy looks like trash. So UPS. All right, we've been talking about this. I was talking about it potentially putting in some new highs here. Obviously, we've been range bound in this level. We've done quite well off UPS. I have been on the sidelines with this one as far as trading is concerned. And we saw a massive gap up. We broke out of the range. And I did say that if we broke out above this range and consolidated, that I expected the measure move to take place and our target of $244. Now, are we going to get there? I don't know. We'll have to see. I don't like when we leave a massive gap like this. What I think will probably happen is, based on the fact that we're holding above here, and this is a pretty strong support, but there's literally just, a bunch of fresh air between us. What I suspect will happen based on experience and what usually happens with these, we usually complete the measure move, hit it, and then come back and fill the gap. And, we know how many times we have played the UPS gap and absolutely crushed it. We played this gap, we played this gap, we pushed back up, played this gap. This has been just absolutely beautiful. Now, we were expecting transportation to top out somewhere around January, February. So we'll see what happens. We're seeing shipping container prices coming down. We're seeing some potential signs of these markets topping out transportation in general. So we'll see what happens. If the economy slows, transportation will probably, ease up a little bit. Maybe supply chains ease up. We don't know, though, because a lot of this is policy mistakes, in my opinion. No, actually, that's facts. It's policy mistakes. Like, the world is run by dumbass people who don't know how to run anything, and they just keep fucking everything up. That's not even my opinion. It's an absolute fact, for sure. I don't care what country you live in, they're fucking up. Let's be real. So anyway, UPS probably pushes up, eventually fills the gap, but right now there's no trade to be had, in my opinion, because there's so much risk of this just dropping back down to 200 and a quick 10% drop. If you were positioned ahead of time for this, it was nice, but there's nothing really to see there. So I'll jump over in the comment section real quick, and then we will continue on ripping. Where do we leave off? Quinn Rivers says, interesting. Okay, maybe energy and commodities. Yeah, possibly. I think a lot of the energy trade has already played out, man. There's definitely still some meat on the bone, potentially, but I want to see at least a short to midterm pullback. But, it doesn't have to happen just because I want to see it. I'm massively bullish on energy long term and have been forever. I was massively bullish on oil way back when everybody else was like, it's the EVs and they're taking over and we're going to power the world with sunshines and rainbows. Well, how'd that work out for you? How about nuclear power? Because we know it works. Ralph says, where's the group you're mentioning? You can message me, man. The group is on Discord. The email is in the, information for the channel or whatever. But it's cryptotrentrader@gmail.com. Ralph also says, need to bounce, but I'll watch the recording later. Oh, sorry, buddy. Took forever to respond to you. If you get a chance to answer my question above, been enjoying the content. I appreciate that, man. Thank you for the kind words. Community has been on fire lately. Awesome feedback and positivity. Toby says, in case of dead cat bounce, what potential Bitcoin targets to watch? I want to exit some spot. We're about to do Bitcoin here in a second, actually. The bounce has happened, in my opinion. We're at the 200 exponentials. This is our reversion to the mean play. So, Soto says maybe reversion to the mean and the parabolic throw over is on the table. Yeah, 100%, dude. And Quinn says most leaders suck and aren't fit to lead. Sad but true. Yeah, most of them are career leaders and have never actually done anything in their lives other than be like politicians or leaders or whatever. You know, it's like people, oh yeah, I'm in charge of, you know, business stuff. And it's like, oh great, what business have you on? Oh no, well none ever. But I mean, you know, I have a master's degree from Harvard. And it's like, oh great. So you read a lot of books and your parents are rich and you're an elite. Awesome. But you have no actual real world experience? Oh great. That's great. Awesome. Awesome. So Bitcoin futures chart. Okay, so this is our reversion of the mean play. We broke down below 200 exponential and simple. We confirmed them bearish. They both flipped over negative. We got the reversion to the mean off of our bullish divergence. One drive right here, one drive right here, a low, a higher low. We are back above the slope line. It is positive, moving back to the upside. Flip the 821 back to the upside. We're retesting the 200 exponential and simple as resistance. What I don't like about this situation right now is the Stochs are getting towards the top of the range. We're at resistance right now, consolidating. We tabbed the 200 exponential perfectly, and they're both sloped not too aggressively, but to the downside. If we can reclaim 46,400, I will be glad to potentially get bullish on Bitcoin again. I do not think that's going to happen. I think more likely than not, we're going to come back down here and retest like 42,000, and then we'll see what happens from there. I think more likely than not, especially if we see some weakness in the stock market, we're going to go down. I mean, let's keep in mind here, I might have to go to the other chart. Let's keep in mind here that, I mean, we hit our targets for the initial push down, and then our potential bounce, you know, with that wick, obviously, our potential bounce that we expected back up was to that key fib level at like 54,000. But do we have to get there? No. It's all about just how strong we're going to be here. So we don't know how strong that's going to be, but you know what? I can scroll out really quick. Ignore these big boxes here. We know that whenever we see these blue circles, that's the beginning of a bull market. Whenever we see the like red or pink circle, that's the beginning of the bear market. So we have confirmed the beginning of the bear market, and this is just a retest to make sure. The market's like, oh no, we're bearish now. And it's like, are we sure though? And it's like, maybe not, let's go. Or it's like, yeah, we are, this sucks. So that's what we're paying attention to. Doesn't look good though, in my opinion. I mean, it looks okay right now, but this is the same move we always see. Now we'll go to the spot chart and we'll talk about the actual breakout and how we were discussing this. So we've obviously been in a long-term monthly downtrend here. You know, this was obviously what we were paying attention to. You know, we had the bullish divergence. I was expecting or hoping for one more drive of bullish divergence as confirmation, but it's okay. We took advantage of some of this move to the upside, took some profits at 40,000, and then took some profits also recently as well. We'll see what happens here. I'm out of the majority of my position just to wait and see what happens because I like to lock in gains. So, and same with the altcoins as well. I pretty much dumped my altcoins after some of them had like 20+% moves to the upside in like 1 or 2 days. But for the most part, I mean, we're off the lows like 30+%. So it's a nice time to lock in some gains, in my opinion. But our measure move to the up, this was the last time we were talking about it. And I didn't know, obviously, we were going to push up here and break out right away. But we were discussing basically a potential breakout somewhere around this range and then taking us back to retest the 200 exponential and simple. So we basically got that. We got the breakout. We got the measure move of the channel from the bottom to the top. And that has basically taken us back up to 200 exponential and simple. We haven't quite gotten there on the spot markets yet, the same way we did on the Bitcoin futures chart. Spot market would be 46,750 and just under 50,000 for the 200 simple. So not ruling either one of those off the table by any means. But again, this just looks like to me, we lost support on the 200 exponential and simple. We're trying to reclaim them. And if it fails, we see continuation to the downside. And here we have much more history where we can look at that. So we can see here, obviously, this is the same time frame. This was right before the CVD dump right here. This was the top of the 2017 bull market. We found support, lower high, broke down below the 200 exponential and simple, retest them to try to come back up, fail to reclaim them, and then we go into a prolonged bear market. And that was our cycle. And then the same thing happened the cycle before that, which is why, again, you know, I'm not being biased here. I'm just going by what happens typically on like every chart ever. not to mention Bitcoin's 4-year cycles. We topped here in 2013. We come down, retest the 200 exponential and simple, try to reclaim them, can't get back above it, slowly bounce, break down, enter into a bear market. And that is our bear market that lines up perfectly with our 4-year cycles. And then that's exactly where we're at right now. So is it possible that this time is different? Sure, 100%. But do I expect it to be different? No, I think it'll probably just be exactly the same. And people are like, yeah, but we didn't get a blow off top, and Bitcoin should have went to 100,000, and it's going to 250,000. And, you know, I saw a pretty girl with Bitcoin on her shirt, and she's bullish, and Peter Schiff's dumb. Okay, whatever. I mean, I literally don't care. It just cracks me up. Like, people are so invested in these things, like, mentally. It's like, why do you care what goes up? Like, and crypto blows my mind the most of anything. People, like, join these cults and get obsessed with crypto, and they're like, I'm never selling my Bitcoin. It's like, well, why are you investing in it then? Because I'll be rich one day. But you said you're never going to sell it. Well, yeah, I'll just borrow against it. Sure, okay, whatever. If you're not in this game to make money or to retire or to invest, to one day drive around in whatever it is that you want, you know, a Bentley or a Ferrari, or live in a nice house, or, you know, have 6 wives or 3 cats, whatever it is that your goal is that has to do with money, okay? That's what you should be focused on. Not whether or not you think the asset that you're investing in is cool, okay? If you're going to change the world, invest in a charity. That's not what this is about. First we get the money, then we change the world, okay? Let's just keep remembering that. No cults. This is a cult-free channel. If you or someone you know is involved in a cult, please call the No Cult hotline. 1-800-NO with a bunch of zeros. Cults allowed. So Ethereum, obviously we were talking about the parabolic top. We broke down from that key. This key channel that we've been operating inside of for the whole entire bull market. And then we started to put in lower highs. So we had a high, lower high. That was our red parabolic trend line. Then we had a high, lower high, lower high, lower high. That was our orange one. We broke down below 200 exponential and simple. Started putting in a series of lower highs as well. So we don't have the clear-cut channel like we have with Bitcoin, because this is accelerating to the downside. So it's basically forming like a sort of like an ascending broadening wedge, or like a, you know, a megaphone pattern to the downside. So then when it poured out right here and just absolutely capitulated, we come back up, and when we broke through the yellow line here, the retest, the measure move was this blue arrow, which we did. We did that. We got it. Check. Perfectly. Almost there now. Cross 821 back to the upside. Starts looking bullish, but we're at resistance now. So this is where we take our profits. We're also retesting the orange parabolic trend line. If we break through this level, you know, we retest the next level, which is 200 simple at 3,559. We break through that level, we retest the next level, which is our red parabolic trend line, which is like 4,000. And it also corresponds with some of our horizontal, you know, resistance and support. I mean, if we just take a little horizontal and just kind of slap it in right around here, we could see that was the top, bottom, 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 bottom. So it wouldn't be unrealistic to think that we could potentially get back up here to 4,000 if we see that continuation. But the same way that we stair step, you know, on the way up, or stair step on the way down, that's what we look at. We look at key levels of support and resistance, and we just go one after another. But I don't want to give you the wrong idea. Like, I'm not bullish on Ethereum. We're still well below the 200 exponential and simple. It still looks slightly better than Bitcoin, but let's remember, we crossed above the 200 exponential and simple at $175 in April of 2020. And now we are below them. We saw one time where we came down where the 200 simple crossed above. We started to accelerate to the upside, and then it rolled over again, and now we're well below those levels. So if we get rejected here, we go into a long bull market. Bear market. And this is our last bear market from 2018. We break down below the 200s. We reclaim them slightly, flip them back over blue. The 200 simple never actually flips over red here. And then eventually we break down, and then we go into, you know, both of them flip red or pink or purple or whatever color it is on your screen. And then bear market forever. And we lose, you know, 90% of the value. We're losing to 90% of the monies. No more monies. So we got to pay attention right here. 200 simple has not rolled over yet. 200 exponential has. Is it possible we retest this? Is it possible we get back on top of it, put in a lower high, and then roll over? Anything is possible. But right now, it looks like this is the potential area we would expect a rejection to occur if it's going to occur. So we're near the danger zone, the take profit area after a nice little push to the upside. All right, Bitcoin dominance. So we obviously got the 1, 2, 3 drives of bullish divergence on the weekly Bitcoin dominance chart at support here in green. We have a resistance here in red. I do expect this eventually to push back up to that resistance. Turning off our drawing tools, we see the 8 and 21 broke down back here on the weekly. And now here we are consolidating, potentially getting ready to break back up. So what does this mean? It means Bitcoin is going to gain market cap if this breaks out to the upside and starts trending upwards. And the way it does that is by either going up faster than all the shitcoins or by going down slower than all the shitcoins by, percentage / dollars, because this is the percentage of total market cap. So if crypto's market cap goes down by 1 million and Bitcoin is 40% of that, but Bitcoin goes down less than all the other shitcoins combined, Bitcoin would gain market cap. I know most of you guys know that stuff, but I like to reiterate it because it's important. But the resistance level would be right up here around 45%. We're at like 42.2 right now. So we got the bounce exactly where we expected. The 3 drives of bullish divergence, obviously, very clearly. That's our next target. Eventually, if we get back up here, we break out. The measure move potentially takes us back up to retest 200 exponential and simple. That's the top of the one. We come back down. We retest resistance. Again, we're extrapolating these moves way out into the future. We take it one step at a time. Total market cap on the weekly. So obviously we topped out right here. We broke down. This is the retest we were discussing. A retest of the 8 and 21. This time we saved it. We took it back. We reclaimed it. We continued to the upside in new highs. That's perfectly fine if we do that on the weekly. But we need to pay attention here because once again, bearish divergence. A high, a much lower high right here. A high, a much higher high right here. And the same thing on the Jewel Thief as well. We have our high right here. We have our high right here. And then we have a slightly lower or same high right here, which is a type of bearish divergence. So we'll have to wait and see. Of course, if we can reclaim this area, we could easily move back up to the upside. Crypto goes to 3 trillion. Bitcoin goes to new highs. We all get Peter Schiff-shaped rocket ships and fly to the moon, where we start our own colony. And we just trade our Bitcoin POG tokens with each other. Who knows? I don't know what the future's going to look like. But, I'm not against it. I don't not want Bitcoin to go into another bull market. But we got to look at probabilities and likelihood. So we'll take a look at some... What do we want to look at? Some commodities next. I'm going to jump back over in the chat. Quinn Rivers says, there's a CME gap roughly at 41K too. I don't have any charts in front of me, but it is in the 41K range. The CME gap at 40. There's a couple CME gaps right now. This is that's nothing. I'm okay with that. This is the gap. It technically closed at 40,655. And then it opened back up at 41,355. So, we're talking about like $600-700. I'm okay with that. I'm not worried about that. There's like way more aggressive gaps that could be filled here. Like, this gap fill right here didn't get filled technically. We have gaps way back down here. This one still hasn't gotten filled. This was a breakaway gap right here from 23,600, and that was a breakaway to 26,600. So that was a $3,000 gap. Still has not gotten filled. There was another one, I think, at 18,000 or something like that as well. So, they don't always have to get filled. And, depending on how much the gap is, it's not that big of a deal. I'm not worried about this one, honestly. Under $1,000 on an asset that's worth like 40,000. That's nothing. It's close enough as far as I'm concerned. It's basically like, okay, we're going to go fill the gap. And then it just got front run. It doesn't mean we're not going to go down there. I still think there's a high likelihood we could go down, but it's not worth like it's not worth sweating one way or the other, I guess is what I would get at. But as far as putting weight on them, most gaps get filled. It's like probably 90 something percent of the time gaps get filled, but occasionally we do have breakaway gaps. So it is possible that it is a breakaway gap. KOls 93 says, can you check out Gala on anything in particular, or? Does the exchange matter? Just against USD on, I don't know what has a good history. Bitstamp. This doesn't go back that far. Is this pretty new? Is this from 2021? There's not a ton we can do right here. We can draw a fib. We're basically in the middle of an internal bullish retracement after a bearish dump. But essentially, we basically busted above the 618 right here. So the target would technically be like the 786 if we were bullish. So 42 cents. Assuming by the price that it is pretty relatively new. So we want to see this area hold for support, like 34.3 cents. Resistance would be the 786 at like 42.2 cents. Not a ton we can really see right here, though, honestly. And this aggressive move was so powerful to the upside. It's not, we don't have like a clear like channel or defined like anything. I mean, it traded pretty technically as far as like this right here, the breakout, tag some of these. We can go to a shorter time frame just because it is so young. It's back above the 200 exponential for the first time. Slope to the upside. Looks like it's definitely starting to roll over right here. We're seeing some signs of divergence. So we have this top right here, and then we put in a higher high here. We have a lower high right here. It looks like it's rolling over. If it breaks down below 34 cents, that's going to give the 821 cross back to the downside. And then I would expect support at like 30 cents, 29.5, which is the 200 exponential and that key fib level. If it continues to the upside, my target would be like 42 cents. Looks like it wants to roll over, but to tell you the truth, man, it really just depends what Bitcoin and like the rest of the crypto space do. It's going to have a real tough time getting back above like that 43 cents though. That would be my probably take profit area. Just because there's a lot of chop right here. And there's probably a lot of people that got upside down in this from it chopping around so long, got stuck in their positions. They would just be thanking God that they have the opportunity to exit at like break even or somewhere close to it. So doesn't look terrible, but probably is topping out or at least close to it. All right. So gold, doing what gold does. Range bound trading forever. So we came back down, tagged the bottom of the range, and now look. So we were at the top of the range. I was like, oh, look, we're at the top of the range. I bet it goes to the bottom of the range. Oh, look, we get to the bottom of the range. We tag the bottom of the range. Oh, yeah, I bet it goes to the top of the range. Oh, look, we're almost back at the top of the range. I mean, forever doing nothing. Forever doing nothing. When this breaks out, though, this is where we want to be. Okay? If gold breaks out to the upside, we will be all over this gold move to the upside. And we're headed back to new highs, most likely. Possibly some ridiculous valuation. But if it breaks down, we're going to get the hell out of the way on this one. Probably hedge ourselves via paper. Obviously because we're not just going out like pawning off our gold. That's our savings account, our insurance against the system. It doesn't look particularly great. Doesn't look terrible. Technically, overall bias is bullish. The moving averages are at this point in time, the moving averages are basically useless on gold. It has been going sideways for so long and we're just at the 200. It doesn't matter if we're above it or below it, in my opinion. It makes zero difference because it's just flatlined at this point in time. A consolidated move in either direction with confirmation will lead to likely a long duration move. So if this breaks down, it's probably going into a multi-year, like decade bear market. Does that seem likely with everything happening right now? Well, okay, let's make an argument for both. Okay, so the argument for gold to go into a bear market. Inflation gets crushed because the economy starts getting destroyed because they tighten, monetary and fiscal policy. So people aren't worried about the system going and crashing down. Things go like kind of back to normal, but slow down. GDP goes down. Nobody's worried about inflation anymore. Nobody's worried about, the economic system like crumbling and the money printing and all that stuff. So gold just goes back into hibernation. That sounds viable. So what about for, a breakout? Well, the economy starts looking bad. They start printing money again, start to go into recession. It gets out of control. They have to print trillions and trillions. The world starts to break down. People are afraid of all these fake assets. They run to commodities. They buy up gold. Gold breaks out to new highs. They revalue the currency, in the world. And we come up with some world reserve currency that's gold backed. I mean, there's an argument for either one that could sound viable. Like if you literally came back to me from the future and you go, oh my God, you won't fucking believe what happened, dude. And then you tell me either one of those scenarios, I'll be like, yeah, that sounds right. And I wouldn't be surprised in the least bit. Or even something crazier than that. But we just have to see how it plays out. Because gold's not telling us anything right now. It's not giving us any definitive way in one way or the other. So if gold breaks out of this range, I will gladly take long positions in gold. If gold breaks down from this range, I will gladly hedge out of positions in gold. But right now, this is just dead money. Has been since mid-July of 2020. And that's fine. There's nothing wrong with that. We want gold to be dead money. This isn't our speculation. Everything else is our speculation. This is a store of value. Anyone that says Bitcoin is a store of value should be taken out back and put down, old Yeller style, okay? Because they're brain dead. This is what a store of value looks like. Crypto is not a store of value. Silver looks much worse. Again, it was able to save the bottom of the range, which is good. We were able to consolidate once again back above that support line. But we're very clearly here in a bear market. We're very clearly putting in lower high after lower high after lower high. And we're just getting squeezed. And this is going to start looking more and more just like a descending triangle. And then eventually the descending triangle breaks, the pattern breaks, and we end up with a measured move and silver back in the teens. Do I want that to happen? Of course not. I would love for silver to go to $50 or $90 or $200 or $500 or a gazillion dollars. I would absolutely love that. I love silver. It's great. It's pretty. It feels good in your hand. It's heavy. I love silver. I got plenty of it. But the chart doesn't look good. So we got to be real careful. Does that mean you shouldn't buy silver? No. I mean, the way I look at it is you should always be buying gold and silver. And we can use the ratio to determine which one to buy at any given time. But, that's our schmuck insurance. That's our savings account. That's our, Mad Max, God hope it doesn't come to that. And you know what? The best part about that insurance is our premium, doesn't go away every month. Every month we put that money in gold and silver. We take the profits out of our speculation account. We save in gold and silver. And then one day we hope that we never have to use it for anything. And it just stores our wealth. And then we die and we give it to our family. And they can continue to pass on generational wealth through gold and silver. Like has happened literally since, the beginning of mankind. Or whenever we were discovered gold and silver. I don't know. It's hard to picture like cavemen finding gold and silver. But maybe they did. Maybe they found a piece in the stream or whatever. And gave it to a random cave woman or whatever. I don't know. I'm not sure the exact origins. But it goes back pretty far. Maybe not that far. Maybe back to like Egyptians, Mayans, something like that. Civilized kind of people. So GDXJ, this is our gold junior miner ETF. So this is our gold miners and this is the juniors. So this chart is so old. So old. I don't remember when we drew this, but it was so long ago. And we're literally just still operating inside of that channel. So it's literally doing, if gold is just going sideways, putting in like a flag, like a neutral triangle, the miners are just slowly just melting down, lower and lower and lower. And if we turn off the drawing tools, we see again, well below 200 exponential and simple. We do have like a little double bottom action going on right here. So, you know, I'm dabbling around a little bit in some of these, but I'm not like overly bullish by any means. You know, as long as we're below this 382, it looks like we have topped out and we're basically coming back up to retest it. And then we're probably going to head back down. Basically tagged the 0.5 already. So the next target to downside is the 618, which is like 31, 32. But, you know, we'll just continue to operate inside of this channel going down for probably a long time until we don't. And then we'll look at the measure move to the upside. If we break down, we'll look at the measure move to the downside. But, I mean, this has been going on for so long. August 20th. August of 2020, rather. So silver juniors, same thing. This one looks a lot like silver, the actual silver chart. You know, basically just consolidating inside this range, break down below 200 exponential and simple, rejected, lower high, consolidating at the bottom of the range. A lot of this is First Majestic, though. It's weighted very heavily towards First Majestic, so looks okay from now. If it breaks down from this level, though, it's going into like single digits, which is not good. Like, you know, $9.50. In order to get bullish on this thing, we have to break above $13.60. That would be above the 236, above the 200s, and then we could potentially start threatening the high right here at like 14.55, and then we can talk. But until then, I just cannot get bullish on this. Doesn't mean you can't buy down here, you know, but don't be surprised if all of a sudden it goes down another 15%. Oh, and also, I do want to remind you, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. So UEC, so it's just a uranium proxy. Or we could look at URA or any of the, you know, Cameco, whatever, it doesn't matter. They all pretty much look the same, like almost exactly. This is looking, it's looking pretty toppy right here, at least temporarily. So we obviously were on top of the 200 for quite some time, come back up, retesting it, trying to reclaim those levels. It is possible to reclaim those levels. First time we touch them, we barely break through it. Second time, we have a double tap and break through it. Continue to put in highs. And now here we are, barely bouncing it, lower high and roll over, and then retesting it. So one of two things is going to happen right here. We reclaim this and we try to push up higher. That's fine. That's bullish. Or we get rejected right here and we roll over and we end up in a daily bear market again. Now, you guys know I'm very, very bullish on uranium long term. And this looks okay on the weekly. You know, we got very bullish on UEC at like, you know, $1.30 or something like that when we took out this high and broke above the 200 exponential and simple. But right now, it looks like what it wants to do is come back down and retest these lows and the 200 exponential. So I would not be surprised to see this at $2. And it's at 322 right now. So if this gets rejected and rolls back over right here, you know, we're talking about, you know, losing, you know, 40% of its value before a massive bull run. But, you know, 40% is a lot. So LBS1 lumber futures. So, okay, obviously there was some crazy stuff going on with lumber. We reclaimed some key levels and then we literally just gapped down every day in a row, came back up, topped out, came back down, retested 200 exponential and simple, and now we're just gapping up. So, I mean, the chart looks weird, but it's obviously rampant speculation. This is not actual, this is not actually lumber related. In my opinion, this is pure speculation. So we'll see what happens right here. We're still technically putting in a lower high. Back on top of the 200 exponential and simple. We could easily come back up here and retest the highs. But this, in my opinion, people are like, what's going on with lumber? This is crazy. It's just rampant speculation. But, you know, again, that gets behind the commodity boom potential. So let's look at these pot stocks. I know Hexo was looking pretty bad there for a bit. You know, I know some people were probably thinking like, oh, what the hell was I thinking? Buying this thing at whatever, 80 cents, 60 cents, 50 cents. Had a little bounce. Don't want to get overly bullish right here, okay? We had a little fake out right here and it went much lower. That was at $1.60. when we had that last fake out. We did get the cross on the 821 on the daily. That's a good sign. We have some bottoming signals. You know, we left the bullish control zone or bearish control zone. We put in a ton of bullish divergence. We don't want to get too excited yet, though. Yet. We can get excited eventually, but let's not get excited yet. But the potential for this thing, even a bullish retracement of the bearish dump to some of these key levels, could take us back to like $1.30, you know, $1.90, maybe retested 200 exponential and simple at like $2. Wow, there's so many fibs here. Okay, I don't feel like dealing with that right now. We can look at one thing really quick, though, that I have been talking about on Hexo quite a bit. So let's just take a quick little look at the overview on this and why I'm actually like bullish on this. And I like this. Not only do I like the pot sector because there's a legit argument to be made, but if we look at the market cap, it's 248 million right now. Okay, 248 million. If we look at the, oh, whoops. If we look at the financials for the balance sheet right here, we can see total assets is 1.05 billion. And total liabilities is 464.2 million. So if we subtract total liabilities from total assets, we end up with like basically 540 million. And we see the market cap based on the stock value and outstanding shares is 248 million. So this thing is basically trading at a 50% discount. Now you always want to allow a little bit of slack, you know, because if they were to just get bought up and liquidated, you know, they're probably not going to get book value for everything they have. But the fact that it's trading at a 50% discount when everything else is trading at ridiculous multiples, sure, it's the slowest horse in the race. But even if somebody decides, okay, we're going to take this thing out back and shoot it, we're going to just buy up this company, absorb it, that's good because the stock price probably doubles. Or they buy it and they say, okay, we're just going to dissolve this thing. Or the people that own it just say this company sucks, we're going to dissolve this thing. You know, they liquidate it and, you know, basically it's worth more than they owe and the stock is valued at. So arguably there's some value here. You know, this is a value play. You know, and it was worse a couple days ago before this last little run up like 30% or whatever. So now we'll have to see what happens. You know, obviously could go either way. You know, we're not taking like huge positions in this stuff or anything, but overall there's definitely some potential here. And then obviously, you know, operating at a loss, but less of a loss, growing revenue. You know, we see here in 2019, revenue was 36 million. The net was minus 53 million, obviously, which is not good. Then from 36 million revenue, it went to 60 million in 2020, but the net income went from negative 53 to negative 407. So a bigger loss, but revenue going up. And then we see from 60 million in revenue, it has gone up to 99 million in revenue in 2021. And, you know, obviously this is an outlier for the net, but it went from negative 407 to negative 91. So still losing money, but growing revenue consistently and not effing it up is bad and undervalued. So is there value here? I think so. I think so. But we'll have to wait and see. I mean, it could very easily have another pullback. I mean, it just had a powerful move off of like going to zero. 1 minute it looked like it was going to zero. The next thing it goes up 55% in a week. So is now the best time to buy? Probably not, but we'll see what happens. That's why we've just been slowly building a position on these things at the lows, at the lowest lows. So Tilray, so same thing, okay? Tilray it did have a lower low back here at like 250 during like the crash of March 2020. You know, found some support essentially at a higher low consistently. So this is like technically our third higher low. Went lower than we wanted to see right here. Invalidated our 5-wave structure to the upside by going below the bottom of the 1 right here. So sure, that sucks. it is what it is, though. Doesn't mean this thing can't turn it around. But once again, if we just take a look at Tilray's financials, just for a quick look, this thing is worth $3.22 billion market cap wise. If we look at the income in 2018, it was $43 million for a net 67 loss. In 2019, it was $166 million for a net 321 loss. And then in 2020, it was from 166 to 513 million, and from 321 million loss to a 367 million. So again, not making money here, but look at this revenue growth: 43 million to 166 million to 513. Now, part of that is acquisitions and whatnot, etc. But again, just looking at it from, kind of a neutral to potentially bullish view on the space and the potential of cannabis industry in the future, a $3.22 billion market cap right now after a decent move to the upside. And then if we go over to the balance sheet, we see their total assets are $6 billion and their total liabilities are $1.5 billion. So they have, $4.5 billion, and the company is only valued at $3.22 billion. So not quite half. It's more like, 2/3. So it's basically trading at like a 33% discount. So not quite that 50% discount that we're looking for, with like Hexo and ACB, but still, in a world with everything being extremely overvalued, you could say that these things are like a needle in a haystack, potentially. Maybe they go to zero. Maybe. Okay, this is the craziest one. ACB obviously is reporting tomorrow. So, we'll see what happens with this, okay? I would not be surprised if... All right, so we know it missed horribly in Q2 of 2021. Q3 of 2021 missed by less. Q4 of 2021 missed by even less, but still missed. Q1 of 2022 beat, but like by fractions. So if we get a beat right here, this thing could explode to the upside. And from closing the gap on the misses to beating, to potentially beating again by like a decent amount, we could see some potential here. Market cap under $1 billion now. It's under 919 million right now, or at, let's say, 920 million right now. Again, just looking at income statement, 2018 was 41 million revenue. 2019 was 187 million revenue. 2020 was 197 million. So they grew it, but not by much. And then here, 198 is basically like flat. So we want to see revenue growth. Didn't really see that the same way that we would hope to. But just looking at the balance sheet, again, just asset to liabilities, the company has $2.2 billion in assets, and it has 554 million in liabilities. So if it sold off all its assets, paid off its liabilities, there's still, $1.7 billion sitting around. And the company is worth 919 million. So it's basically worth 50% of what it has on the books. Does that mean it has to go up? Does that mean that it's not going to go down further? No. But does it mean there's some value there? There really is. In my opinion, there really is some value here on these. We also hit a double bottom right here. Again, does not mean we don't go lower. But I have a feeling that what happens with this is they either meet or exceed earnings, and I think this thing pops off to like $7. Retest the 200 exponential and simple. Maybe just keeps going lower after that. But there's some meat on the bone right here for another like 50% pop up higher, like fast too. So we'll see what happens. Again, we're building positions in this stuff. Doesn't have to go our way, but looks pretty good. Excuse me. Sorry if I just coughed in the microphone. I thought I muted it in time, hopefully. But yeah, so that's it for our commodities, that potty stocks, and all that good stuff. KO's trading on KuCoin. Okay, that's what's up, man. Yeah, no problem at all. Okay, so yeah, probably just going to go ahead and, what are we at right now? I think we're making pretty good time. 120. Yeah, we're still doing fine. So DXY is next. DXY looking nice. Finally had that pullback that we have been expecting. Off of that very clear bearish divergence, we had a peak right here. We have a much lower low, a much lower high right here. Peak right here, a much lower high right here, and then we see obviously a peak right here and a much higher high right here. Very aggressive move up, very aggressive move back down. Everyone is like, oh, the dollar, it's crashing, it's crashing. No one ever says how great the DXY is doing when it's going parabolic off of the lows. But the second it goes down a couple points, all of a sudden it's like, oh, the dollar's crashing, all our sweet, sweet speculative assets are going to the moon. It cracks me up. This thing is very aggressively moving to the upside. It's just consolidating, resetting. This is a bullish reset, in my opinion. This is what we needed. This is what we needed to see. The dollar cannot continue to strengthen because it will literally cause turmoil in the world markets. It has to relax for a little bit. It has to give other people around the world an opportunity to close some of these positions and settle out, or else it's going to be very, very bad for the universe. Well, scale that down one notch. For the world. That's better. The world. On the weekly, though, we have reclaimed the 200 exponential and simple. We have broken above the 200 simple, and now this is our reversion to the mean. We're retesting it. We're going to see if it acts as support. If it acts as support, we continue to the upside. If it breaks down, we retest the next key level, which is a 200 exponential. If that breaks down, this is going to look like a failed rally. We go lower. The Fed is probably printing. The dollar is losing its world reserve currency status. I will gladly admit that I was wrong. You know, we go much lower. We come down here, retest the lows. Maybe we just put in a higher low, but we continue to the upside. Who knows? But the likelihood after breaking above the 200 exponential and simple and then losing it is unlikely. If we lose it, the likelihood of regaining it is very unlikely. So that's our weekly. And then if we go to our monthly, you know, we basically have bounced on top of this chart for the first time, reclaimed above the 200 exponential and simple. We have the slope now flipped over blue on the 200 exponential and simple. This is very, very bullish. Hard buy signal coming out of the bearish control zone. The histogram has crossed above the zero line, above the slope line. The slope is blue. We're about to enter into the bullish control zone. The 8 and 21 have crossed to the upside. This looks very, very bullish to me. Very, very bullish. In the middle of being bullish, there's no reason we can't have, you know, a couple red candles come in here and reset and let things happen while we just continue to, you know, kind of melt up right here. Even right here where the dollar was going absolutely parabolic in the mid 90s to like, you know, 2002 basically, we had plenty of big green candles and plenty of, you know, multiple months at a time of red candles, pullbacks. You know, it's a stairway all the way up. And this was the key to when it was topping. 1, 2, 3 drives of bearish divergence. And then we go into a long, long, long bear market afterwards. So hopefully we have demonstrated quite a few instances of bearish and bullish divergence, how they can play out, what to expect. You know, sometimes they're invalidated. Sometimes they fail. Sometimes they underperform. Sometimes they overperform. But it is very important that we pay attention to these things because often divergence is the market signaling us of what it's about to do, leaving those breadcrumbs. Tesla, you know, people are starting to talk super bullish on Tesla again. Let's get rid of all this. Do we need this? After it, we'll just leave it. I don't care. I'm like so ready to just delete every chart I have and just start fresh with some clean stuff. What's the best way we could do this? Let's see what we got here. I don't love how any of this looks, honestly. I think probably I would go with something like this. If we're going to go for... I would probably just kind of leave this little outlier out here. It was like a gap up, sort of like failure. I guess arguably you could say it was something more like this. That looks pretty good. And it was like a gap up failure, retest failure. So, seems very viable. We're above that key support at 900. Nice round number too. People love that 900. we could easily get a pushback up here to like 1,000. I don't think we break back above 1,000. If we do, we likely get the measure move. And the measure move being obviously from, the bottom of the range to the top of the range. If we broke out, I would not be surprised if we got the measure move. I don't think that's what's going to happen, but you know what? They don't pay me the big bucks to think. They pay me to do the TAs. You put the TA on the screen or else you get the hose again. So yeah, that's what I'm seeing here. We're bouncing 200 exponential and simple. Doesn't look particularly great, but it doesn't look terrible either. If we break, we're basically towards the top of the range. 989. So let's just call it even 1,000 is the top of the range. The bottom of the range is like 780. And we're at 932 right now. So, looks like it wants to roll over here, but realistically probably just consolidates around and does nothing for a little bit. So Nvidia got a nice bounce off the 200 exponential and simple at resistance. So this is the key area that I'm watching for, is like 275. If we break back above that, this is going to look good and arguably might turn around my position on the semiconductor space and I could start to get a little bullish again. But if this rolls over, this is going to further our narrative that semiconductors have potentially topped out. Transportation has potentially topped out. Yield curve inversion is inevitable. Lots of big red flags when put together with divergence that we could potentially be seeing the topping of these markets. I wanted to see an energy spike to correspond with this. Does not mean we're not going to see that, but we have been kind of just like creeping up. But $100 is expensive for a barrel of oil. It's like 2014 expensive. Like, it's been a while. So, and who knows, if we break through 100, maybe we go straight to 120, maybe we go to 150, new all-time highs. I don't know. But we know that those four things with bearish divergence have signaled literally like every market top without fail. So we're looking for semiconductors to potentially top out. We're looking for a potential spike in energy / oil, which we are seeing that in different places other than the United States. I mean, look at nat gas, lots of other things as well. In different countries. So I try to think about it more as like a world scope type thing. Coal prices, nat gas, oil prices in a lot of other countries are like through the roof. Just because it's not like crazy high here or spiking here doesn't mean we're not seeing that same spike happening or in other people's currencies as well. What I say, semiconductors, energy, transportation potentially topping out cyclically around this time of year as well. And then what did we forget? Oh, and then the yields, obviously. We talked about the deep dive. We looked at the 2, we looked at the 10, we looked at the Fed funds rate. We see, that potential deep dive video that we did about, essentially like the trend, the correlation between all these things. What happens to asset prices? What happens to bonds? What happens when this inverts? The probability of a bear market or recession whenever we see the 2 and 10, and the probability of not having a recession when we see the 2 and 10 cross, and then the probability of having a recession without seeing the 2 and 10 cross. And if you didn't see those videos, it's 100% of the time. 2 and 10 cross, we go into recession. And we never go into recession without the 2 and 10 crossing first. So, which came first, the chicken or the egg? AMD. So AMD was able to reclaim this key support level and get back above that previous high right here. Now acting potentially as support again. But now here we are doing the same thing as Nvidia is doing. Retesting that key support from before, which now we would expect to act as resistance. So, we're at that level now. If we break above that level, potentially start threatening the highs and, go into new all-time highs. But this is the area where we would expect a potential rejection to take place. So we have a sort of like descending resistance kind of slope line ordeal going on here. We have like an ascending or descending broadening wedge type deal going on here. So this is kind of what we're paying attention to. It's not like beautiful or clear. We don't have a million touch points. Like, it's not amazing, but it's giving us kind of range. And we have a 200 exponential and simple here. We got a couple horizontals. So we know we're basically at the top of the range. If this pushes up right here and starts to roll back over, we expect our, same stair step down to happen. But those are the key levels we're looking at. So All right. I think that's all I had on the charts for today. I didn't want to get too crazy with a bunch of charts just because I've been having so much freaking trouble with the TradingView slash browser situation, which I'm 99% sure it's TradingView and not the browser. But I like updated everything, went through, cleared the cookies, pulled out the Ouija board, prayed to the dark gods. I did literally everything I could to try to like potentially get this to actually work. And apparently one of those things worked. I don't know which one it was, but you know, I mean, it is what it is. I'm not sure which one it was, but something made it work. So hopefully some kind of update. TradingView was probably like, oh, the thing we did that was pointless that nobody asked for is crashing stuff. So should we fix it, boss? Yeah, I guess so. Fuckers. I mean, I love to hate TradingView. Or maybe I hate to love them. No, I love to hate them. They suck. But I also have had, some experiences with them and their team. But anyway, that's it for tonight, I think. We're going to call it there. Unless anybody has anything they want to take a look at real quick or whatever, I think we can go ahead and wrap it up. It was the dark gods. I mean, hey, who knows, man? I'm just even if it's a like good and bright and like shiny god, they definitely have like, a dark sense of humor. I mean, you can look around and tell that for sure. For sure. Quinn says, laughing face. Yeah, definitely, man. I mean, I try to keep it fun. Technical analysis, not always the most fun. Doing learning and putting in work, not always the most fun. So, with my random jokes and sense of humor, I definitely try to, keep it entertaining. Half the time I feel like I'm just entertaining myself, but I'm okay with that. I like it. I enjoy it. And honestly, I would be doing 95% of this stuff with or without you guys. So I might as well get on here and, talk about it. So it's definitely fun. And I do appreciate, all the positivity, all the support, all the good peeps out there, everybody in the group who has shown their support and gets to utilize the, indicators. It's nice to have a little community, tight-knit community of awesome people that come and go. But it is what it is. I know how it is. A lot of people are not full-time traders, so they're not going to be active like 24/7 all the time for months straight in a group. But, I see like the little cycles of people and everything, and it sounds like everybody's doing good. I see how much everybody learns, and, that's the biggest thing. And like the community and the positivity and everything, I see like a little, like all the toxicity going on now that everything's not just like going to the moon all over the place. And I mean, if I see it, I know it's really bad because I don't use social media. So the fact that we have like this awesome, small, isolated, cool community, on YouTube and then also like in the group where we can just laugh and have a good time and, talk about like real serious, important shit and, make money doing it. That means a lot and says a lot. So, I know I personally am grateful for the community, the group, the channel, how fortunate we have been throughout, these last couple like bull runs, last couple years when a lot of other people are struggling. So, do something good for the community, for, people around you, your family, friends, whoever, whatever it is you can do, something positive. Even if it's just be nice, help somebody with their groceries, pick up an old lady and carry her across the street, even if she doesn't look like she's going that way. Whatever it is, just do something nice. You know what I mean? Random acts of kindness. So, but actually, maybe don't do that last thing. That could be technically considered kidnapping. And times are weird right now. So, maybe just don't do that one. That's probably a bad idea. Nice one. Thank you, man. But yeah, that's it. We're going to go ahead and wrap it up there. Appreciate you guys. Thank you, everyone. But it looks like everything's going to be back to normal. So for our Sunday stream, should be able to load back up and do like a shit ton of assets. So expect, a ton of stockaroonies back on that one. We're going to see what happens tomorrow. And you know what? I think what I'm going to do is, I think once I fill I have like 2 more slots that I want to fill on the group. And when I fill those 2 slots, like 2 more people, I'm going to start doing 3 days a week live streams. So after we grab 2 more people in the group, I'm going to go to a 3rd day for live streams, because basically you guys are showing your support and I want to give back to those that are giving too, and the little reciprocation, the positive feedback loop deal going on. So yeah, I'm willing to dedicate a third day to streaming online. So I will get some feedback from group members and the community, and we'll figure out a day as soon as I'll start planning out right now. I have a couple people that I've already reached out. So as soon as we fill those 2 slots, we're going to be going live a third day of the week. And I think that'll be good too, because right now, the way it kind of works out, I have the days spaced out pretty well with Wednesdays and Sundays, like before the week starts kind of, and then midweek. But I think having another day in there would be nice too. So I don't want to switch the days necessarily. Like I like doing Sundays and Wednesdays. But I mean, maybe if we did like a Tuesday morning, so we still have like Sunday night, and then we have all day Monday, no stream, Tuesday morning stream, all day Tuesday, no stream, all day Wednesday, no stream, Wednesday night stream, and then, Thursday, Friday. Because we could do like a Friday stream. I just don't know how many people would be interested in watching it, and it would pretty much have to be like a market wrap-up stream, which isn't that useful because then we do another stream on Sundays, or it would be like a crypto-focused stream because crypto is like the only thing that's open on the weekends. So, but again, if you're listening to this, let me know what you think, what your opinion is. I definitely want to hear what everybody else has to say, and we'll go with that. But yeah, we're damn near ready to go to 3 days a week, so that's pretty awesome. A link to the Discord? Well, it's like basically you make a contribution, you join the Discord. So it's like our trade group / Discord or whatever. But that's like I give the 2 indicators for like access to the TJD TDMACD, or no, TJD Master and the Jewel Thief. The one that's on the screen right here. And this one, top one right here, the newest version of the Jewel Thief. Those are like the 2 indicators that are group only exclusive. And then we actually have like the Discord as well. So, and then actually, if you're not using them already, all the other indicators are free. I have like, I don't even know, I want to say it's like 10 or 12 free indicators published. And it's like literally like thousands of people use those. So those are all completely free. They're linked down below, or at least like listed down below in the description. And you go on TradingView and get those. Also have like a chart link, all that good stuff as well. So, and there's a bunch of old videos teaching you how to use the indicators, a bunch of like tutorial, like teaching videos for anyone that's interested in educating themselves. But yeah, that's it. So if you are interested in the group, you can reach out to me via email and secure one of those spots. And also, if you are interested in giving your feedback and letting me know what day or time specifically, because I know everybody's on like different times. It's definitely an international community. If there's any particular time or day that you guys would be interested in that third stream, it's all for you guys. So you let me know what the best day and time would be, and we'll get a general consensus and see what works, and we'll go with that. So, but that's it. Going to go ahead and wrap it up there. I appreciate each and every one of you. Love your friends, love your family, love yourselves, love your dog. Cats are all right. You can be impartial towards them, but except for like lions and cool cats, those you can love them. Just don't go near them. But that's it for today, Crypto Trend Trader, with our midweek market update. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. It is 9:40 p.m. Eastern Standard Time on February 9th, 2022. And brap, that is a wrap.